So welcome, and thank you very much for having the opportunity to present you SERV. We have seen a lot of topics today about the export credit agencies, OECD, and after the big Italian SACE organization, I would like to present you the small Swiss export risk insurance SERV, which is quite different to SACE, but we all follow the same rules, we follow the same goals. We want to support our local exporters. We have as well a big textile industry in Switzerland, which is innovative and quite successful on the market, and we try to support this how good as we can. If we look at SERV, in a few words, we can see that we are a lot smaller than other ECAs, but we are still the Switzerland state-owned export credit agency. We are at the moment more than 60 people, growing fast. Especially within the last 5 years, we have been growing up almost for over 20 people. We insure transactions every year amounting to 8 to 9 billion Swiss francs. And compared to the other numbers, we only support around 350 to 400 Swiss exporters every year. This gives us a little bit an advantage, so we're very flexible in how we deal with our customers. We're a small team. We know all exporters personally, and we really have a close relationship with them. Our main advantage on the market is that we have a AAA rating from the Swiss government guarantee, and this is really one of the key advantages for our exporters to have successful financing and really have attractive conditions on the interests and access to financial institutions all around the world. We have been the winner of the Bern Union deal in 2018, which was a great success for us, a big project in the Middle East. If you want to have more information on this project, we have a big documentation on our website. As an ECA, we have to follow certain framework conditions. For us, that's the supervision by the Federal Council, so we only act subsidiarity to the private market, and we also have to follow the international commitments from the OECD and the Bern Union, and we also have to follow the Swiss legislation because we are organized in Switzerland by Swiss law, and the federal government gives us certain rules. They also give us the financial security on the background so we can enable the transactions we insure. As you can see, we are very small organized. Our management team consists of 3 people. We are, our department where I am, we are divided into 3 categories of exporters. It's the small and medium enterprises, which are really important in Switzerland for other industries than the textile industry, but also for suppliers of the textile industry. The small and medium enterprises are having more and more success on the market internationally. We have the large enterprises, which are the famous Swiss exporters who are present currently at this fair. And we also have a special team which takes care of the multinational project financing, where we also try to set up matchmaking deal events. First time this year. We started with 2 rounds, and it's actually an ongoing procedure right now. If you think about export, we normally only think about traditional goods, like machines that are exported, but Switzerland is also very famous for other things like intangible goods, like services, construction and engineering work, license work, and know-how agreements, which is really important, especially in certain industries where Switzerland provides an educational role to develop certain industries in difficult countries. We also insure project financing projects and working capital and contract bonds. So we also try to go a little bit further than the standard ECA business. But at the glance, you can still see that we are very small, but for Switzerland, it's still a very important financial support that we provide our exporters. As you can see on the main products, the most important product for us is still the buyer credit insurance, which has been explained perfectly by my colleagues from LBBV. But still, the supplier credit insurance is sometimes the key to have access to financial institutions, especially in a negotiation stage of the contracts. It's very easy for an exporter to apply for supplier credit insurance, and as soon as they have our official cover confirmation, they can start having negotiations with banks, and they already have the security that SERV will promote this, will insure this project. And so changing a supplier credit to a buyer credit is only an administrative workflow. The commitment we have in total by industry, first from Switzerland historically, we have a big background in power generation and distribution, and that's the main industry we support. But in the mechanical engineering, that's the textile machinery industry, and that's for us since decades the second most important industry we support. And as we can see, just from the numbers from last year and the previous year, 2017, we see the same trend. Exports grow and grow, the market gets bigger and bigger, and we are very happy for our exporters that they have a lot of success and use our products to enable this success. The commitment by region for us is obviously almost the same as from other ECAs. We see a trend in Eastern Europe, Central Asia. That's the biggest growing market at the moment, but also Middle East, North Africa, and Latin America are really growing markets for us. And we expect this year to have even more commitment in those regions. Let's talk about our products, which we offer. But first, as we know, the export credit agencies, it's a win-win solution for exporters mainly. That's our focus. Our customers are the exporters from Switzerland, but are also the banks, which are our customers as well in every export transaction. But we do not have to forget the buyer. We also help the buyer to have access to a good financing option. And this is really the key factor to offer this whole package, a good export product, a good insurance, and a good financing options as a total. We ensure the non-payment of the buyers, and the credit risk is collateralized with a AAA rating by the SERV rating. And as a politically independent ECA with a very stable environment from Switzerland, this is really an advantage on the market for the banks. If they work together with SERV, they know it's an absolute stable country. The rating will remain the same over the next years. So it's really a good starting point. We are small, but we are very high, flexible, and efficient. We really look at each transaction personally. We do not have any automatic workflows. Sometimes this could be an advantage for certain projects, but still it enables us to have a certain flexibility to look at each project differently and look for a perfect solution. Our experience in the textile industry is really long-standing. I mean, all the Swiss companies, they are really long on the market, and they have a long relationship with SERV. And we also have a long relationship with financial institutions who are really the expert in ECA export finance. Our risk approach, we have 4 types of risk we cover. The most easiest thing to cover is the traditional sovereign risk. We do not see this that much often in textile projects, but still there are some countries where Ministry of Finance guarantees are available for textile projects. And eventually, if those countries will grow again and start to renew their industry, that may be as well an opportunity for the future. But mostly we have a risk approach on corporate risk. We will analyze them on profit and loss, balance sheets, and this is sometimes not that easy, especially in certain markets, but it's the risk that is the most demanded from us. Also, the bank risk is getting more and more important. We will see this later. We have a lot of projects, especially for smaller exporters, that we realize on a supplier credit basis, but in the background there's a letter of credit which is not confirmed by a Swiss bank, or the costs involved to confirm the letter of credit are simply too high, so that the exporter is willing to accept a certain risk on his own if we insure just the bank for 95%, but we will see this later. And of course, for the really big projects, especially in the energy sector, we are working with project financing risks, and those are the transactions that involve the most manpower and take the most time to analyze the projects and find a solution. The insurance premiums are regulated, and they're based on different values, like the country category, the risk type of the buyer. I will not go more into detail for this, but I can recommend you, if you want to have a feeling for a SERV premium, our premium is transparent. We have a calculator on our website, so even the importer can calculate the premium and knows what kind of cost he will have if he chooses a SERV insurance cover. Our product range, that starts already with the offer stage of an exporter, and it ends with the loan repayment. And we also have products that enable small exporters to have access to liquidity. For example, if an innovative new company, a young business starts with a successful product and they supply it to the big brands, they need to place down advance payments. And there we have some insurance products like the contract bond insurance, which gives them the liquidity back, so they can give out the counter guarantee, but still have the liquidity to produce the machines or the goods. The two products I want to focus is the supplier credit and the buyer credit insurance. And we have heard this from Sacha, it's the same basic insurance cover we offer. It's the insurance against political risk, transfer risk, del credere risk, and force majeure, which sometimes in special markets is also very usable for the exporters. We have a maximum cover of 95%. The Swiss government does not support at the moment 100% cover. We always want to have the exporter in the boat. In case we have a claim, there's always the interest of the exporter that he will find a solution with the buyer. And for this product, we have a 3 months waiting period. In case there is a claim, after 3 months, we will take care of it and pay out the exporter. One example that I would like to give you, which I talked earlier, is the supplier credit on a short-term basis, which is really interesting for especially small companies in the textile industry, which demand this product quite often during the year. It's a financing up to 23 months. And there's no down payment needed. It's 100% repayment after 23 months. We can do this on a private buyer risk analysis, and we can do this also on a letter of credit basis or a bank guarantee. And the advantage of this thing is that, especially in markets like Bangladesh, where you have good local banks, but they do not have any connection to an international bank, so the international bank does not want to confirm the LC. We can cover the supplier credit up to 95%, and the exporter has only a risk of 5% left, and in most of the cases they had already previous experience with those banks, and they simply want to have a better insurance cover and access to financing. The demand for this is getting higher and higher, especially as for the small amounts of transactions. The buyer credit is simply too difficult and too expensive to set up. Of course, there are also suppliers that use medium long-term financing and insurance cover over a supplier credit. Sometimes if they finance the deal on their own, but as well, as I said in the beginning, the supplier credit is still the product that enables exporters to have access to discussions with financial institutions about an export transaction. I do not go into detail. It's the same structure as we heard before. The supplier credit is really the advantage for the exporter, that it's easy to set up, it's easy to request at SERV at any stage, and it's still working perfectly. So, although it's a simple product. For us, as we have seen in the beginning, the buyer credit insurance is the most important product for the textile industry. The insurable risks are the same. What we have done here, we have a 95% cover, but we have reduced the waiting period to 1 month. This also has, or they should promote the banks to use this product and enable exports. So they have, in a claim situation, they only have a 30 days waiting period. So it's quite flexible for them and gives them a security they need to provide an interesting financing. The examples we have here are the standard ones we already heard today. For the medium-long-term business, we need a 15% advance payment from the buyer, and we can finance up to 85%. Depending on the consensus category of the import country, we can go up to 10 years. We need minimum half-year repayments, and the first repayment needs to be done 6 months after the starting point of credit. The starting point of credit in the textile industry is usually the commissioning date of the machines. As you can see, the buyer insurance, credit insurance is a little bit more difficult, but all the banks that work with the buyer credit insurance, they know all the details and support our exporters perfectly with their products and fast solutions. As we heard from my colleague from the OECD, as well for us, especially in the textile industry, the sustainability and environmental process and analysis is very important. And in certain countries, this is still quite a challenge also for us. We examine our commercial operations in regards to environment, prevention of corruption. This especially involves the exporter. He has to sign a special form if he sends us an application for a new project. We also look at the development in the importer's country, and of course certain regulations apply, especially for the countries where there is a sustainable lending in place. As an officially government-supported export credit agency, we also create transparency. We want to show the local people, but also the other ECAs, what kind of projects we support. Therefore, projects above 10 million Swiss francs are normally published on our website. Sometimes we cannot disclose the name of the exporter. This will happen then in a later stage. As well as the environmental analysis is for us a little bit the same as we heard from my colleagues. We do sometimes this with an external expert, especially in Uzbekistan, for example. We gain now more and more experience with local companies that are doing the analysis for us. And for us, it's important that we have those arms in the market, that we can rely on partners, and also because we're quite small, we need to have external help for those projects. But every environmental analysis is done in-house first, and the people in our institution, they will lead the project with the external advisors. The basis of the environmental review is based on the local standards of the buyer country, which differ sometimes completely, and also the safeguard policies and the environmental health and safety guidelines from the World Bank. The recommendation on the common approaches on the environmental and officially supported export credits are also part of our analysis, as every other ECA has to take care of. So that was the small presentation of SERV. If you have any questions, I'm happy to answer them.
Actually, it's not a question. It's just a thought that I've had. That all of the ECAs we've talked about this afternoon have been European ECAs. So we've been talking about their insurance and guarantee products. I think for the benefit of people here who are looking for ideas for financing, that we should mention that some of the non-European ECAs actually step in and play the role of the bank of that financial institution and provide direct lending facilities.
That's correct. Yes.
About a third of OECD ECA cover is actually direct lending, where they step in and effectively replace the bank. So I just thought, seeing that same chart up there 3 times this afternoon, I thought, actually, there's a piece to this puzzle that we've missed out.
Absolutely. I mean, that would have been really an advantage for us as well if we could play the bank in one step. And that's also an advantage for the exporter at the end of the day. They have one single contact point of entry for the export transactions. And yeah, we will see what time will give us. I mean, Switzerland would be definitely the place where, with all the banks, where an ECA should also start to offer financing. But on the other hand, it's for us very important we preserve working possibilities in Switzerland, and we also provide working conditions to our banks. So that's yeah, also an advantage of an ECA if we split up this business. And I think if you look at the regulations a bank has to fulfill nowadays, we already have more and more regulations in our business. So being a bank, I would say, would at least triple the people we need. And if that will be in the beginning or in advantage of the exporter is another question. But overall, it's definitely an idea which could be followed.
Thank you.
Welcome.
Then I think that brings to the end of this first Finance Forum. I would like to express my sincere thanks to the speakers and also the people in the audience, also to all the future readers and listeners of your presentations as they will be put online. Then I think that the only thing that remains me to do is to please enjoy nice Barcelona, enjoy the cava, enjoy the nice tapas and the sunny beach. Thank you all for coming. Bye.